Let's kickstart the first conversation of the day, and that has to do with gold. Now, almost everybody that you speak to will be interested in the yellow metal, and particularly so around festival time. We're not too far away from that mark right now. And recent decisions that have been taken by the central government have directly affected the price of gold, at least in the near term, and they will continue to do so. Let's talk about the direction for gold over the next few months and the rest of the year, in fact. Naveen Mathur, who is the Director of Commodities and Currencies at Anand, Rathi Shares and Stockbrokers, is joining in. And we also have Pankaj Mathpal, who is the MD of Optima Money Managers, who's going to give you a little perspective from the view of a financial planner and how you should look at gold as part of your portfolio. But Naveen, I'll start with you. The latest move from the government raising import duty on gold by 5 percentage points, what's the impact that has had on domestic prices?
Thank you very much, Alex, and good evening to you and all the viewers on the show. Definitely, the move, as you rightly said at the start of the show, is to kind of curtail the imports. We import a large quantity of gold. I think 100% of our consumption is imported. We hardly produce anything in India. So therefore, the import bill might affect the current account, and at the same time what we saw would add up the pressure on the rupee too. So the rupee we did saw last week at around 79.16, the lowest point of rupee against the dollar, because of the number of fundamental reasons we all know. I think the move is to a large extent a little right in perspective. I think the gold is an idle asset, as they say. So therefore, the kind of imports which we might see, the June import number itself, Alex, was around 101 tons for this particular year versus the last year, which was negligible. So the government is concerned on rupee. The government is concerned on how the economic situation pans out because of the uncertainties largely related to energy and the war between Russia and Ukraine, which seems to be a long drawn. So I think the uncertainty with respect to this conditions have led the government to take this particular step of increasing the base duty of gold from around 7.5% prior to this move to 12.5%. So today, if you really ask me, earlier, before this move, 10.75% was the total duty on import for gold plus the GST. But this particular movement, it is approximately 15%, 12.5% base duty and 2.5% of the agri cess, which makes 15% of the duty on gold plus the GST at 3%. So I think the move is to curtail the imports, making the little balance sheet, the India balance sheet, a little stronger, and curtail the depreciative rupee, which we have seen over the last couple of months.
So that wraps things up. I will come back to you on your expectation for imports going forward and your expectation on prices. But I want to go to Pankaj broadly just to understand the role that gold plays in your portfolio. It's been part of Indian portfolios for generations now, Pankaj, but perhaps not for the right reasons. What would you say the role is in today's context?
See, I agree with you. Indians have love for gold. And as an investment, there is the importance of every asset class. And gold is one of them. But I'll say that gold will not help you creating wealth in long term, but to has the portfolio, or to provide stability to the portfolio, gold should be as a part of a portfolio. But definitely, as investors like gold, or Indians have love for gold, and we have seen generation to generation means is kept in the portfolio. But now people understand the importance of other asset classes. So considering that fact, I'll say that to a small quantity, parking some money in gold may be a good idea, but not to a large extent.
Fantastic. Let's also understand then, and I'll come back to you, I'll cycle back to you to understand how to hold that gold. But Naveen, I'm coming to you on the factors that are influencing gold prices. Domestically, of course, that latest move on the duty is something that would have pushed prices higher. But there's a lot more that's happening on the global stage. Gold looked at as a hedge against inflation. You also have the war. Where are gold prices internationally heading?
Alex, you're dot on. I should say that yes, whatever is happening in India definitely has taken the prices. Say, for example, 51,000 or so, which we have seen the gold stabilizing at over the last couple of months. It is currently at around 52,000 or so on the MCX. We did saw year to date MCX gold appreciating by around 8%. In fact, the COMEX gold has depreciated by around 1.5%. The only reason is the rupee depreciation, which made the negative returns of gold year to date on the COMEX to the positive on the MCX. Now, relevant questions means what are the factors? Definitely, the physical demand is one of the major factors for India. The rural demand, say for example, the monsoon pans out well as it is anticipated, the rural demand, the retail demand might take to the next level. So demand, the rural and the physical demand definitely plays a critical role in India. I would say people have started investing, as Pankaj rightly said, people have started investing in gold over the last couple of years because it acts as a hedge against uncertainty. The COVID times, if you see, Alex, the prices touched all-time high to an extent of $2,000, $2,070 on international markets, and in Indian markets, we did saw prices hovering at around 56,200 in the height of the first wave of the pandemic. So it acts as an against an uncertainty, hedge against uncertainty. So I would recommend people to invest 10% to 15% of their corpus all the times in gold, not just whether the gold gives returns or negative or positive, but all the time your entire corpus should be 10 to 15% in gold. Internationally, lot many factors have started affecting gold, and they were previously also were affecting. So one of the reasons is definitely inflation. The gold acts as a hedge against inflation, Alex, as you rightly said. So it's a double whammy on the interest rate side. Because of the high inflation, the central bankers are making the monetary policy a little tight one, which is appreciating dollar, and against appreciative dollar, the gold is bound to come down, and it is at around $18.06 levels currently. So one is interest rates, the central bank moves, the uncertainty, the geopolitical environment. At the same time, how the currency moves is something to be looked into, but particularly for bullion, and that too in gold. The retail demand in India is one of the major factors, and definitely, as I said, the rupee also has an impact on the prices. So I think whatever we are seeing today at 52,000 is mix of both the import duty, the custom duty, which has been enhanced, the 5% base duty, which has been enhanced, and the physical demand.
Okay.
Alex.
10 to 15% is what Naveen is pointing out, and I think that is usually what financial planners like yourself, Pankaj, also point out. What form would you suggest? You just saw one tranche of the sovereign gold bond issue close. You've seen significant interest in that. Is that the best way to buy gold, or would you say that physical forms are also okay?
Alex, first thing, as Naveen just said, that 10 to 15% allocation in your portfolio, and I agree with that, investors should not have more than this. So just to provide some stability to the portfolio or to hedge against the inflation. And when I say that to a small quantity in your portfolio, then definitely physical gold, I'll not suggest. Physical gold is for consumption. If you want to wear gold, if you want to wear jewelry, then there is no choice. But when it comes to investment, you have another options, like one you mentioned, sovereign gold bonds, and you have a choice of ETFs, gold ETFs, or gold mutual funds. So sovereign gold bonds is one of the best choices, I'll say, because there are two particular regions. If I compare means amongst these three, what I mentioned, gold ETF, gold mutual fund, and sovereign gold bonds, so it will be my first choice. The reason is that when you invest in sovereign gold bond, one is that these are issued by Government of India, means issued by RBI on behalf of Government of India. So it has a sovereign guarantee. You don't need to worry about the purity of gold or liquidity, or at maturity you will get the money. So these are the things. Apart from that, the best part is that you get additional interest over and above the capital appreciation, what you expect from gold. You also get 2.50% interest every year which is your additional income on that. And as you know that when you sell gold, you have to pay capital gain tax on that, whether long term or short term, depending on the time of holding of that gold in your portfolio. But with the this sovereign gold bond, when you redeem it after 5 years or you get maturity proceeds after 8 years, you don't need to pay long-term capital gain tax on that. So that is additional benefit. So considering these all facts, that one is that liquidity is there and no long-term capital gain tax after 5 years, and plus that additional interest, as it's the best choice. And one more thing, it's not like that after 5 years only you can redeem it. Before that also, if you're holding in your demat account, then you can trade it, like you trade your shares or bonds. Similarly, you can trade your these sovereign gold bonds. So that is why that is another benefit. Liquidity is available. So depending on the demand, you can transfer these bonds to another investors. So considering these all facts, I'll say that's the best choice. But then, as I mentioned, gold ETF can also be a good choice, because at a real time basis, you can buy that and liquidity is higher there. Or if you want to invest through SIP route, then gold mutual fund is another choice, where you can invest through SIP also, and ultimately you get benefit by appreciation in gold prices.
Thank you so much for wrapping that up. Naveen, I'm going to come to you for the final word now, because I think a lot of times people choose to buy gold not necessarily because of the price, but because of various other aspects. But having said that, I just want to ask you, 52,000 right now, as things stand right now, but do you anticipate that it'll taper off towards the end of the year? And with that in mind, what should the strategy be?
I think if you said Alex taper off, it means either sides, either on the upside or on the downside. But I think if you're saying about the taper off, I would say that yes, the sudden knee-jerk reaction with respect to the basic duty has definitely appreciated to an extent, and have given a kind of an impetus on gold or for the prices to move up. But as things stay today, I think the Federal Reserve will continue to maintain a very tight policy. Inflation is a concern globally, and I think global world, including the central bankers, are now concerned with inflation. So I will say two ways. Inflation is one thing where the gold booms, means because of the demand of gold to hedge against inflation, there can be the investment demand which can come in from the institutional side across the world, although it is not looking that way as this particular moment stands. But yes, the investment demand can be positive going forward tomorrow. But with the actions of the central banks, the inflation surely would come down, and we feel therefore the gold prices will not hold beyond 1850 at this particular moment. They are at around 1806 on the dollar term. So I'm slightly neutral to bearish on gold on international markets, and not very bearish on India because of the rupee depreciation against the dollar. So 52,000 would be something kind of a knee jerk, which we are seeing. 51,000 or so, Alex, would be something on the Indian space. The prices should stable at around, so 50,500 to around 51,000 levels would be something where the markets over the course of time, because I think the Russia-Ukraine war has been discounted, the premiums has been discounted on gold currently. So 50,500 to 51,000 on India.
Fantastic. All right. Thank you so much, gentlemen, for taking the time. Wish you a very, very good evening, and appreciate the time that you've taken.
Alex, same case here. Thank you very much.